I've been in a while.
Okay. What's up with you, bro?
Doing good. How are you, Carter?
Man, it's been a lot of great opportunities, bro. A
Good.
lot of them.
Good. Glad to hear that.
Yeah,
Yeah.
way
Tell
more
me
than
about it.
huh?
Tell me about it. That's good.
Um, you say you want to hear about it?
Sure. If you like, whatever you want to talk about.
All right, so just to get things rolling into the stop. Um, so my son is doing coding, and they made it up to like artificial intelligence so far.
Wow.
He
Okay.
don't. Yeah, so it's like one of one of the guy's daughters that's a part of the coding group. She actually is she took this robot, and if need be, I can. You want me to show? You want me to play the video?
Sure. You want to do a screen share?
Yeah. You gotta go in and open it up.
Is it like if you share your screen, that would allow you to like play it in the background.
Well, I can't.
Do that?
You gotta control that.
Oh, is that right?
Yeah.
Shoot.
It ain't hard to do it. I was doing it the other day too.
Right here, I'm gonna make you the host. There you go. So like now you're the host. You can kick me out now.
Nah, man, I ain't gonna do that.
Okay. I haven't used Zoom in a minute, so I'm kind of rusty on what all the buttons do. There you go.
Okay. Let me close this. Dang, hold on.
And Zoom, I'm gonna say Zoom is pretty nice. You can do a lot more with this than that you couldn't do
Before?
Like Skype was probably like the most popular video one before, like early mid 2000s.
Yeah.
And I just saw Zoom has other things like you can send a calendar invite, and, it's just so easy to share. And Zoom. Zoom stock did pretty good for me this year.
Hold on. Give me 1 second.
Yeah, I saw a video with like
Nah, that was one of them, but that wasn't the one.
Mm-hmm.
And I got it now. It's so crazy, bro. Like to hear what she's saying and how she did it.
Your daughter?
Nah, my home girl's daughter.
Okay. That's a beautiful thing. All of us. These lockdown has some challenges, but you can see it as an opportunity. All that time you would have spent in the car and wherever else, you can work on a trade if you want.
Can you see this?
I see it now.
Basically, it's just going to scan it. Here, I built a Rubik's Cube solver with Legos, and I'm going to scramble it. And
what?
It's just going to scan it with the RGB color sensor.
What? Get out of here.
Watch this.
To solve it.
What?
So once I insert it, it's going to send it there.
What?
Scanning process.
So we can flip the cube around, and then it looks like it rotates the bottom third.
Oh, I'm gonna tell you.
It's coming together. I see it. That's crazy. How you write an algorithm like that?
I'm gonna tell you. It's crazy, bro.
I see it. What? All right. I'm done.
Hey,
She has a bright future ahead. That's
so
beautiful.
listen. It took her 2 days. So she built the robot, right? But she took some popsicle sticks and she set them in the square space for it to hold that Rubik's cube in place so it would twist and turn. And she did the coding for it too.
Dude, that's amazing.
Man, it blew my mind.
That's
And like
amazing. Yeah.
the kids were so drained from like celebrating and watching it and doing it. My son and them didn't even go the next day.
Yeah, that's so inspiring. It's like when I try to get into coding in the past myself, and I have a background in education where I take classes and structure. I could just never stick with it.
Yeah,
But just imagine you being in like an environment where you have like lots of kids, kind of crazy bitches like that. Just how the energy you have being in a community like that.
mm-hmm.
So I think that's pretty good. I think that's what I need to find, like a community, something to get inspiration from.
Yeah, I think that's what helps. You know what I mean? I think that's what really helps. But I'm looking at what oh, so I wanted to go ahead and talk about just a few questions. You know what I'm saying? Like I didn't want to have it long drawn out, but I did want to talk because I missed out on some opportunities that I shouldn't have been on an emotional buy for. You know what I'm saying? In the market.
So you say you missed out on some opportunities in the past couple months.
Yeah.
Markets, they just find a reason to go up. When you think hope is lost, they find some reason to go up. Yeah, I can't explain it.
It was so many opportunities, and it's like I think it was just a school of learning for me at the time.
Yep.
So now it's like instead of playing for the couple of months I'm playing or the year I'm playing in the market, now it's for the next decade. That's what I'm challenging myself, not to be emotional, focusing on certain companies that I'm my mind is inquired about and not looking for, oh, I want to invest into this because it's this cost and then I want to, it's going to be because it's something particular and specific that I'm looking at and I'm analyzing. So it's shaping my mind. I'm like, if I was able to use a little bit of money and get what I've gotten, now let's see what I can do. So my a friend of mine sent me the information about IPO, and I had already planned it in my mind and my approach.
So IPO, it's like a new stock that's listing, initial public offering.
Yeah,
right?
the initial public offering.
So there's a lot of buzz recently around DoorDash, Airbnb, and then before that set, there was Palantir and Snowflake. And when you see how much Snowflake and Palantir went up, you're like, oh, I missed that. So you want to Palin, you're just like lemmings or like
I don't.
Palin, like that's the fear of missing out. We're all human. We all fluctuate between fear and greed.
I really didn't get caught up into it. Cause in the past it's like IPOs always go up and then it comes crashing down. And I'm like, instead of me spending that money to like crash, I don't have to do that.
That's chasing hard money. That's like Russian roulette. You can make a fortune just having like a longer term outlook, buying we call it the blue chip, like the proven companies that have a track record. IPOs it's hard. It's like that's a special skill set to analyze something that early. And I know without that, it's too risky.
I'm not looking forward to it. Like when she sent it, I was like, I'm glad that people are getting involved into the stock market that's relative to me. But it was like, it didn't make sense. Like if I know that if I run into this door and when I ran into the door, it didn't move. The next time it comes along, I'm not gonna run into the door again. I don't want to keep doing that same move. So I'm like, okay, I see what the IPO is, the initial public offering. I don't have to take that bait. So now I'm like, let me look at the long-term investing or long-term investing. Like when I saw the movie theater, right? AMC, a lot of them are closing, right? So what's the next business move? Well, we're not gonna be going to the movies. So it's like, okay, what am I gonna do? So I see that Disney been investing into their catalog per se. HBO just came up with a new, I think HBO Plus, if I'm not mistaken, and Cinemax too. But I know that HBO, AT&T owns HBO. So for me, I'm like, why not invest my money into AT&T to be able to gain from the dividend if I'm looking at long-term investing for the next decade? Like, even if it's one share of stock per month for the next decade, at least I know I'll be generating some income and it's coming in. So, like that made me think about Apple as a long-term investment. And like, just to get your thoughts on that, because if a decade ago Apple was $4 per share, and I spent $100 on Apple, that would have gave me 25 shares, correct? At $4 a piece.
Yeah, I mean, a story on Apple. I believe I've shared with you before. 2012, my sister just finished school. She saved up $2,000 from working internships in the summertime, and she never owned a stock before. So she asked one of her friends who was a investment advisor, and he said, just buy Apple. This is 2012, about $20 a share. So she bought 100 shares of Apple at $20 a share. And then fast forward to 2017, Apple was at $200 per share. She went from $2,000 to $20,000. But that was a 5-year. She just bought it and didn't think about it.
Didn't think about it.
Didn't look at it again for another 5 years. And then, because boom, it's already at. Now, she turned 2,000 to 20,000. When you take a step back and you kind of reflect on your own behavior, when you see when your stock goes 10x, it's hard to sit on it. It's also hard when you see it chop in half or you lose 20%. You want to that fear, that risk aversion. You just want to get out. But like 5 years, you don't even need to blink an eye. If you really believe what you have, it's gonna go up. So
Yeah.
a lot of investing, it's not that hard to pick a good stock. It's easy to know what a good company is. What's hard is controlling your behavior and
I think
like those impulses. That's the hardest thing, and that's the first principle of investing that people overlook. They think they try to do something clever. They try to find something hot or new.
Yeah.
They try to figure out some kind of trend or sector. None of that matters if you don't control yourself, if you don't master your own emotions.
I agree. That's what I saw. Like the beginning of COVID, it was like, oh, the market's crashing, whoop de whoop. And I bought the bait on some of it, but I didn't go hard on selling and getting rid of everything. I just left my money where it was on certain companies, and I took money and I put it on other companies that I thought would make some money. But it's just more or less like what I noticed about myself is the last recession, I wasn't even in the market. I didn't even think about the market.
So the housing
But
crash and
yeah,
09, 08.
yeah.
Yeah,
But
I'm with you. I didn't buy a stock till about 2 years ago.
but
So
it's understandable why. But it's like me learning about Bitcoin and the cryptocurrency it started sparking things. Also, like the more that I studied and the more that I saw, I always would see those charts, like I always say, on CNN, the Market Watch or whatever. I feel like it piqued the interest, and I recently found out from my pops, like he was saying that the only reason that he didn't get into the stock market is because when he was in college, he was an older man in college, and he was asking questions to the professor, like raise his hand, asking questions, and the professor told him put his hand down, stop asking questions. And I feel as though like had my father, said fuck it, excuse my French, I feel like he would have he would have invested in the Amazon in the year 2000. He would have been one that would have known about Apple and things of that nature, because we had a computer in the house when I was a kid. He didn't let us touch it, but him being an accountant, I'm like, numbers, dude. And if you know numbers, you already see and think 10 years down the line anyway. Just imagine the knowledge that you will have now. So it's just amazing to see $4 could turn into 10,000, and then the next decade of what Apple is building and doing, man. I think that's $100,000 right there from $100, and not just not knowing what's going on, bro.
everyone has, yeah, definitely. If we had a mentor, that if you had someone like like a Warren Buffett in your life, or like an uncle, and you just you had someone that they weren't giving you fish, they weren't picking your stocks, but they kind of put you in the right direction,
Yeah,
kind of put some rails to set you in the right direction. But we can't go back in time or regret that. And one thing, to take one step back, like you mentioned your friend that was probably forwarding you like all these new IPOs and probably asking, should I buy this? Or like they never bought a stock before. If their first stock was Airbnb, I say good for them. Or
yeah,
or
yeah.
or, like it has to get started somewhere. But they probably lost money. I mean, they went down as everyone called them. It was way too expensive last week. It went down, lost money. But same thing, like I lost a lot of money in crypto 3 years ago, but I didn't sell. Now I'm actually up.
You up?
I'm up a
Oh,
decent amount. I lost a lot of money from mining, but I knew I was going to keep the Bitcoin because like I put a lot of blood, sweat, chased around all the cards with that much emotion invested. I knew I would never sell it, and 3 years later, I'm getting a return. But as my knowledge and my emotions have kind of matured, I've diversified more in to stocks and learned like why is being diversified helpful, like why building a portfolio of different asset classes helpful. It helps temper your emotions. So right now I have shares in collecting art, um, crypto, mainly Bitcoin. I'm about 80% Bitcoin, 15% Ethereum, 5%. It's just fun stuff that I invest in to study about.
yeah,
Um, but I have all these different baskets, and all the baskets won't crash at once. Like
yeah,
they're
yeah,
we call it uncorrelated assets. They all go up and down at their own pace, but the trend line is always going upward. So
yeah.
that gives me some comfort.
So,
And that
so when you saying different asset classes, um, so what could you share about the crypto space to where it's like what I guess what I've gathered from the jump is technology is the main base for me. It's not just the money. Like what like is it the technology that you're influenced by?
Um, Personally, yes, I'm a technology investor. Like it's technology has always excited me. Like when I had a computer in my hands at a young age, when the iPad came out, things like that. Like I'm like, wow, this makes the world so much better. The way you interact with technology and
Mhm.
internet. It's always something that's excited me. So I've always had a bias towards technology.
Mhm.
But every investor is different. Like for example, one of my brother-in-law, he works in energy. He's worked in solar panels. He's worked in clean energy. So he has a bias and like utility stocks, like your electricity, your water stocks, your solar panel. He has his biases. So everyone has their own biases of what
Yeah.
they want to invest in.
Mhm.
So a bias, it's not necessarily a bad thing.
Yeah.
It's like you have certain preferences. You have certain things you prefer and some things you avoid. So he avoids risk.
Yeah, I
Like
see.
so this is my sister's husband actually.
Yeah.
So Apple went from 2000 her $2,000 investment went up to 20,000 in 2017. He took out half of it. Like that, they talked about together, and like that was her only position. He took half of it at $200 per share, and he bought other utility stocks, like your MOGW kind of stocks,
Yeah.
your electricity, and
Energy and stuff.
and he was diversifying, and he was doing something that would make him feel comfortable. Like if you're not comfortable with your investments,
Yeah.
you should do things to make yourself more
Exactly.
comfortable.
But it's
So he missed out, right? He missed out on another $300 a share. It went up to 500 before it split.
yeah.
I'm not knocking him.
No,
Um,
no. It's understandable.
it was like their main portfolio position. So he went towards, and history is 2020. I started buying in Apple at like 300 per share as he sold out. Um, a lot of people would have told me I was crazy.
Shit, no,
Like Apple just had a crazy run, right? Apple had a crazy run from 20 to, we didn't know it was going to go to 300, we go to 500. But I believe in the company. Like I believe in its culture and brand. So I
but
bought it anyway.
see, like that's major because it's like it makes me segue into saying if Amazon is into the food space, it started out in books. Now it's in the cloud space. Now it's into other things, right? So what about Amazon with the watches and the iPads and the music? I'm like, well, shit. What if Amazon gets into fintech? You know what I'm saying? Financial technology. So I'm like, these opportunities are available. These are things that I see happening in the next, you know what I'm saying? Like in the next frame of things. So it's just something that I see, man. And I'm glad that I'm
Yeah.
aware of it.
Mhm. When you're buying a business or you're investing in a business, you're not buying a fixed entity. Like Apple didn't have headphones the other day. And then they bought Beats by Dre, and now they have the AirPod Pro Maxes, right? You're buying a culture, right? The culture is so they have some assets, right? They have some intellectual property, some IP like the iPhone, the iOS system, but you're buying this culture of innovation. And for Apple, their innovation is design. Right? They're beautiful products. They just work. They just flow. Amazon, it has its own culture, right? And it will be in more product categories, service categories 10 years from now that we don't even know yet. We know it'll keep evolving with the times.
Mm-hmm. It definitely
So
definitely will.
so we just have to figure out like how do you spot the next Amazon? How do you spot the next Apple? And that's the tricky thing about investing. Like what worked this year for me, I did very well. I did over 35. I made 35% gains in the stock market. I well beat the index. I invested the same amount on a weekly basis.
Mm-hmm.
About so I saved half of my paycheck, and then I put that in every week, half of my paycheck. So half of my monthly paycheck would go in weekly, and I put it in increments like that. I prefer more active. I have fun placing my bets. But the main point I'm saying is like what worked this year, like your technology stocks, your Bang, your Facebook app, Google, their valuations are pretty high now. You know, they'll keep growing.
Yeah, it will.
I would be surprised. You know, like Apple's already $2 trillion. I would be surprised if people would pay for it like a $4 trillion company. I think it's going to slow down.
You think it will?
It went from like 200 to 300 to like 500 in 1 year. That's very unusual for a large company to go up that quickly. So I'm saying like if we were to compare the stock market to like blackjack, like you know how to play blackjack?
Yeah.
There's a deck of cards.
Mm-hmm.
Every year, every market cycle, the cards are in a different order, right? The winning strategy changes.
Yeah.
Like every game changes. I like blackjack because, as an analogy, because you know, like people that card count, they keep track of the cards. They know what cards were dealt.
Gotcha.
So for like with COVID, our cards just completely got shuffled with the crash.
Real.
We didn't know. Everything crashed.
Everything.
Like,
Everything.
Also, if you bought
everything.
if you bought anything at the bottom, as long as it didn't go bankrupt, like some oil stocks went bankrupt, went to zero.
Yeah.
You went double or triple.
Yep.
So
I saw a company go.
Yeah.
I saw a company go 50x.
Yeah.
Neo,
they're out there.
Neo went 50x.
Yep.
Dara, I had 23 shares. My goal was to get 100 in Neo. I sold it.
Are you still holding them?
I sold them, but I was just like, they go back to the emotional spending and emotional selling. It's like, as long as I don't pay attention to the emotions going forward, I'm
so did it double, triple,
and that shit
10x on you?
It 50x.
But you got out when? How much sitting?
No, I didn't get. I sold before that. I got rid of it before that.
So it bottomed out at $2 a share.
One.
So did you 5x or 2x?
No,
$1?
It went to $1, and it went from $1 to $50. But now I think it's like $40 right now.
So I was looking at Neo. Tesla, people didn't really believe in Tesla then. Like they kept calling it a bubble. I think we all had this bias against it because all the stuff Tesla was getting. But just for like some simple math, you bought $500 of Neo at $2, and you wrote it out. If you wrote it out 25x to 50, that $500 became $12,500.
Exactly.
Let's say it went up to $10 a share. So you just pull out your original $2.
That's it. That's all.
Let's say you pull out your original $2 and you write out the other $8 gain. You still would have walked away with like 10 grand.
That's what I'm saying. Like that's how I look at moving. That's what I did when I got into IGC a couple of years ago. I was like, okay, I got gains. So what I initially put in, I took out, which I only put $9 in there, and it made me 1,000. So it was like I just took some of that money.
That's an incredible return. Congratulations.
I took some of that money, and all I did was I invested in the Apple and a few other companies, and now it's like, okay, I got Nike over here, I got Microsoft over here. You know what I'm saying? I got Apple over here, and when that split happened, I got in on Apple when it was like, I want to say like 149. So I was like, yeah, I got an iPhone, so why not invest in the Apple? You know, I see people all day on Facebook. I'm like, why not invest in the Facebook? You on Instagram all day, why not invest into this, into this space, the digital currency? So I just, it's just more or less like with me seeing things and kind of like I'm a forward thinker. It makes it where it's like when I can do a better job at studying a CEO to a company, I can probably I can better see things. I say that. I can see what forward motion that they have. Like Amazon is dealing in pharmaceuticals. Never would have thought of that. Why wouldn't I invest in the Amazon?
And then Walgreens and
You know what I mean?
CVS and GoodRx like tank the next day. They call Amazon the Death Star. Right? Whatever industry it goes in, like it shakes it up. You know, it shaked up books first, and it shaked up retail, and now they're building the bookstore. Like how ironic is that? Right? Now they have bookstores.
No, because
So
there's really no need for a bookstore when they had a when he set up the digital bookstore basically. Now you got to
the themes, yeah, I think that the main some of my reflections of this year is that the themes keep changing, right? If you're looking at the board, you turn around, like the markets are they're changing so fast. There's an infinite amount of information. There's an infinite amount of players. You know, there are these things that will push it in a certain direction, like interest rates. You know, people that want to leave the city, move the suburbs, pushes housing. The price of commodities. Right? When lumber prices go up, there are lumber REITs. They own forests. They chop wood. They big lumber. Their prices go up. There are all these moving parts. It's really hard to track all of it effectively and to make effective conviction bets. So, for example, I could put $100 into one stock, or I could put $1 into 100 stocks.
yeah.
So it's just there's different styles of investing, and I personally I prefer to just keep enough that I'm diversified enough and can keep what's going on. But I also kind of say this to point out, like if you split your bets too small, why don't you just pick the next apple? Like why split it to so many?
Yo, it got stuck. What you say?
I was just saying, like, as you find interesting stocks to buy or interesting assets or altcoins, like it becomes, you start growing, right? You have like this whole collection. It starts getting like hard to keep track of it. Like which one's going to grow next? And so then it comes time that maybe I should start to kind of reorganize, like fold one into another.
I mean, so I guess I'm looking at my strategy going forward to say, let me look at the top 3 companies. What can I invest into them? Am I able to put more money into the market going forward versus my initial formula? My initial formula was just to step into the water and get, see what I can learn and get things down. Once I saw that my formula was consistent, I was cool. But now I'm like, I need to put more money in if I want to get different results. You know what I'm saying? So now that's, like this next decade, that's what I see going forward. Like starting with January 1. I have to keep pushing the line and saying like, no, don't go put $1 or $2 or $3 on it. Man, just go ahead and put $30 out there and see what happens. Do it every week. So that would triple the value of, instead of putting $3, go ahead and put 30. That would really times 10 it, you know what I'm saying?
To do it consistently,
yeah.
That's where you're buying. You might be buying some of the highs, might be buying some of the lows, but you're still buying the trend line that's going up.
Yeah.
So it's real easy to, as you're like analyzing it and like you want to find a good deal. There's something wrong with that. And if you think something's overbought, the price is too high, you want to sell it. Like I get that, but nothing beats just investing weekly and just dollar cost averaging. So like, I started buying Disney at $90 a share, and it kind of got stuck around 120, 130. Last week it just shot up to, it almost shot up to 180. It was in the 170s. So I made 50% on Disney. That was the easiest stock I ever held. It's Disney. Yeah. So I made 50% on Disney. You know, when the theme parks closed down, people panicked. They sold all their shares. They oversold Disney. Well, the way I looked at Disney was that the theme parks they're real estate. It's already built. Like the rides are there.
Yeah. But
they
also got into the digital space too.
They have Disney Plus, so they have like a Netflix competitor. They have merchandise.
But not just that. You got the Disney on it. Disney on ESPN, Fox News, and ABC. So it's like
that's part of why they got oversold. People were selling it down to $80 a share. Sports.
They were selling it.
So when I say oversold, is everyone just panic sold during the coronavirus. Because sports pause, right? People are like, how are we going to play sports during coronavirus? Well, we didn't know they would have a bubble, and we didn't know that people would actually do it, and that it would be worth watching. So that's why Disney got sold down so much. That was a buying opportunity.
Yeah, it was. It makes sense now.
So I didn't pick the bottom. I was scared too, but I just bought weekly. You know, I'd buy like once every couple weeks. I pick up a share here or there. So I bought it Disney all from like 90 a share, all the way up to 140. So my average looks like 120, but my return is still 50%. So you don't have to pick magic spots. You just do it weekly. You do it in increments, and I still walk away with 50%.
That makes sense.
So as for like I say, the cards changing, the game changes. This thing is pretty high now. 170 shares pretty high. They're like almost trying to value it like Netflix, and so I'm just gonna sit on that position. You know, it might go down and up a little bit.
But I mean, why not? That's just like Nike. You know what I mean? Like, I think Nike was up to like 136, and we got in at $60. You know, my son.
So you got in early, so you have like a margin of safety. You know, that's the word that Warren Buffett likes to use. It's like you're sitting on these gains. So if it goes down 10%, you don't even flinch. You just let it sit there, and it will surprise you. They come up with new products. They come up with new athletes. They sport. So since you have that margin, you can let it ride.
My bad. I'm good. Yeah, but it's a win-win, bro. I'm glad I tapped in, you know what I'm saying?
So what were you thinking about dividend stocks?
Which ones?
Not just the strategy itself. What attracts you to dividend stocks as opposed to stocks that don't pay dividends?
So the main one that I'm focused on right now is AT&T. I'm like, my phone is with them. I mean, my not my phone, but I
Your
use
phone carrier?
my phone carrier. Yeah, my phone carrier is with AT&T. So like, load up on it to where it's like my bill every month is covered through my dividend pay. You know what I'm saying? So it's like, that's one that if I can focus on at least one company that's driving home dividend payments, it may not be a whole hell of a lot, but at least if I have, let's just say I have 100 shares of that, at least I know I'm collecting a dividend from them. So I know it's other companies that I want to get involved in, right? So it's like, really focus on that this next year. Make that my intentional focus to invest in the AT&T. You know what I mean? And then
the dividend strategy is like you're getting passive income. Usually every quarter, you'll get like $1 or $2 from that stock. AT&T leaves around 7%. So that's like a source of stability. That's one you can just sit on. So there's a lot of different strategies. There's dividend, or what they call dividend growth. You want to buy a company that's growing its dividend. You want to grow. That would also include companies that are getting capital appreciation. So the stock price is going up.
Yeah.
AT&T, it's a stable dividend. It's made some mistakes in the past that it's paying for right now. It bought the Dish network at like way too high. Like how many people you know with a satellite dish? Like someone out in the boonies maybe?
But
right?
Dish got a good deal for it, so I can't knock it.
It's good for Dish, but now that the AT&T shareholders are paying for it because they lost most of that money on Dish.
So what would you say? Like, what would you say is a good dividend hold in for just for a year that I'm looking at building on for year after year?
So the qualities that I'm looking for is that they raise their dividend. That they raise their dividend, I'll say for at least 5 years.
You said 4 or 5 years?
At least 5 years, they've raised their dividend like every year.
So how?
That's a sign. That's a sign of strength of a company.
So what's a company like? Like, can you give me 1 or 2 examples of a company that you would say that you're paying attention to?
Sure. Do a screen share. I can count that out. Can you enable screen share or pass the host to me?
Try it now.
There we go. And okay. Do you see my screen now?
Yeah.
Okay. So I would say if you like a big dividend and you're okay with risks, the biggest dividend payer I have is called Simon Properties. This ticker symbol is SPG.
And that's the mall, right?
That's the shopping mall. So this is a contrarian kind of play, as in like a lot of people, the first thing they tell me is the malls are dead. What are you doing? When I go to their malls, I've gone to at least 3 locations, they're always packed. Like they're always packed. Like
now?
Even during coronavirus, even though they're only supposed to have, even with I'm in California where we're in lockdown again, their malls are always packed. So I went to, and some of the brands there, for example, like Lululemon's popular. The wait list was 2 hours to get into Lululemon. You would go there, you put your name on the wait list, took 2 hours. For the Disney store, the wait list was about 1 hour. Put your name in, they send you a text 15 minutes later. What people are saying malls are dead, it depends on who you're asking. I'll just be straight with you. Like,
I got you.
Younger people like going to the mall more, and females do.
Yeah.
Don't ask your homies what you think about the mall, because your homies don't go to the mall.
Yeah, what they
Ask what your girl, ask what the ladies think about the mall. You get a different opinion. So the second reason that Simon Properties is contrarian is that a lot of people think online shopping is going to kill brick and mortar. They have the best locations. Like they're near the highway, they're in the middle of population centers, they're near like affluent, middle class, affluent.
Mm-hmm.
They have over 200 malls. They're all beautiful malls. So I would concede that some malls will go out of business, but this will be the last man standing. So this is a very nice dividend. So for every share for $87, you'll get $5. You get about $1.25 every quarter, and our dividend's safe.
Every quarter, so for 4 quarters.
Yeah, so you'll get about $5 a year with Simon Properties, and you can look at their dividend history. So I go Seeking Alpha, I click on their dividend history, and you see their dividend has been growing every year. So here it's like 42,000. It's 40. They've been paying dividends for 20 years.
Damn.
So 47 cents. They've grown it all the way up to $2. They had to cut it down a little bit because of COVID, and they had a rent relief. But this is a good dividend play. It's also a good capital appreciation play. Like the stock price will go up because they were 150 per share.
Well, before COVID?
Or COVID, yeah. So COVID they're at 150. So I spent a lot of time doing homework on them, like online and going to their stores. I've been buying Simons at $60 a share. So I'm already up 50% on my position.
You bought it at what?
$60 a share.
Okay.
So first, I just watched it, and everyone kept saying it's going to go bankrupt. It's going to go bankrupt. I'm like, how is it going to go bankrupt? You look at their balance sheet. They have enough cash to pay the rent. If they didn't get any money from rent, they have enough cash to pay the rent, to pay all their bankers for the next few years. They're not going bankrupt.
Next two?
They have so much cash that even if all their tenants paid zero, they would still be standing 5 years from now. So when people say bankrupt, what you do is you look at their finances. So you look up their ticker, you go on their financials. And this is a category investment called a REIT, real estate investment trust.
Yeah.
Typically they own real estate. And wait for this to load. Basically what I'm going to show you, if it loads or not, they have more cash than debt. So that you can't go bankrupt if you can pay off all your bills. So here I'm clicking on their balance sheet. Let's see, total cash and equivalents.
Where you at? Oh, okay. Okay.
About 1,000. Right here. So the top right, that's September of this year. So we have it on quarterly. Let's just do annual.
So what was
cash, 1,000 debt. 24. That's normal for REITs. Okay, so let me go to. Do you have any questions about silent property? We'll go on to like another one.
No, I was just trying to figure out what were you looking at as far as. Were you looking at the total amount of money that they have, or what were you looking at right there?
Yeah, what I was trying to do, I was trying to look at their debt. REITs, the math gets kind of complicated because it's normal to have debt.
No, I'm familiar with a few REITs, like especially like the hotel.
Yeah. This one, the balance sheet of a REIT, it's not as good. It's not as a steady example.
You can pull up another one, bro.
Yeah. So I'll stop screen sharing for a moment here. So like you have an existing portfolio, right? You might move around. You might get out of some positions. You might consolidate. You might look for new positions. So what did
it was breaking up. You said the internet tripping?
Save.
Okay. You good?
Okay. Are we back?
Yeah. You were saying? Nah, you cool.
Unstable. Yeah, so I was saying it's like I would build off of what you already have. So instead of if you already have a bunch of REITs, you might not want to just have all REITs, right? You want some diversity. So if you have a lot of tech, so the question is like how is there a certain sector you want? Like what qualities are you looking for to kind of build on what you already have? Like what if I was looking for a new job, it's not what works for me, might not work for you.
Yeah.
Depending on how I'm already positioned. Right?
So what I'm looking at is definitely tech going into the next decade, because I'm looking at how if this young lady was making a robot and she coded the robot, I see robots in this next decade replacing a lot of positions and jobs for people, whether that's in the fast food industry, where we have in kiosks. So people are not gonna be handling a lot of money. You know what I'm saying? Eventually you're gonna have the robots doing the food for people. So it's like I see the tech space. My other thing is like agriculture as far as hemp. You know what I'm saying? Hemp and cannabis this next decade. Um, and then I don't know if I put Amazon in the tech field, because it's like Amazon is kind of broad, like how I think Apple is going to expand too. So I want to call them tech, but Amazon is in the food, like I said, the pharmaceuticals, it's in the cloud space. I even see Apple going into like the financial sector. And
Okay.
maybe like say for instance somebody like Square. I was listening to a podcast.
Okay. Okay. So we're getting away from dividends. So
Oh,
I just
okay.
want to make sure.
You saying
Right.
dividends.
Yeah. Yeah. So
What
Amazon
about
and Square are dividend players, but
what about
they
Microsoft?
have um, Microsoft is a good. That's a easy like no brainer. Like they're innovating. They have LinkedIn. They pay like a 2% dividend. They still have room to run.
Okay.
Microsoft is going to be a $2 trillion company at one point.
You said 2 trillion?
2 trillion.
Okay.
Like they're not quite the steady Eddie like a Home Depot. Home Depot is so you can only sell so many houses and sell so many home renovations. Just in technology, you can move quicker, right? You're more agile. You like when you're selling code on the internet, right? Your cost basis is selling the next customer is zero, or selling the next video game.
It's zero.
So they have scalable types of revenue sources. So they make a really good video game,
Mm-hmm.
like on the Xbox. Like they own the rails. They own the rails for the railroad tracks. And then
Okay.
the train would be the video game companies. So they
So
have a lot of good avenues to keep growing their dividend.
so what distinguishes the dividend companies?
So when we start selecting dividends, they tend to be companies that have they're already mature. Like they're at least 10 years old typically. Uh, so like they know who their customer is. They know what market they're going at. They're profitable every year. Um, there aren't as many dividend payers in technology. There's a few exceptions, of course, like Apple, Microsoft, as you mentioned. But typically, because they can keep finding new markets so quickly. Usually, they revolve that cash back into new investments.
Okay.
So if you wanted exposure to like agriculture, hemp, cannabis, you can get that safely through Scott's Miracle Grow, SMG.
SMG.
So I'll show you Scott's Miracle Grow. This is one that I've done okay on. With people like moving out of the city to like the suburbs.
Yeah, they went down. Okay.
So SMG, like it's obvious what they do. They sell dirt, they sell fertilizer, and if you grow stuff, you need to buy. You need to refresh the soil. You need to refresh fertilizer every year. Like this is the like best known name brand for soil and garden, hands down.
Wow.
So a share is almost $200. You get about 250, a year, and they've been growing their dividend every year for 11 years. This is a very safe dividend. 2 years ago, they bought a hydroponics company. So like the plastics and stuff that supply a lot of cannabis is grown in greenhouses.
Yeah.
because in greenhouses they can control the lights, they can control the heat. Like they can grow in the wintertime, by adding heat lamps. They can keep out the bugs because it's a controlled environment. So they have exposure to cannabis. But their core business, it's the consumer that's planting a garden in their backyard.
Gotcha. And that's pretty much everybody, really. When you cutting that down.
Mm-hmm.
So after you do that one, I want you to show me an energy, like an energy company, maybe solar or just regular energy. That's what you think is dope.
Sure, I can do that. Check out their dividend history. So for Scotsmere who grow,
Yeah, 50
it was about 50 cents for a bunch of years. They're growing it by like 3 cents a year. And here you see a big blip. So they did so well during the pandemic. Like people were bored at home.
Yeah.
The money that they would have spent on vacations, they spent on their garden. So they had so much cash, they gave it back to all their shareholders. So they gave a $5 special dividend. So
every quarter.
This was a one time.
Oh, okay.
This was one time they gave an extra $5 on top of the normal 60 cents.
Wow.
So I bought four shares of them right before the dividend was issued because I was like, I want that $5.
Yeah.
And I think people are always going to garden.
Yeah.
Like it's
not going anywhere.
Yeah, but for me to buy this much at once, it had to be a conviction bet, and that conviction bet was, I understand the company. People buy soil fertilizer every year. They have some exposure to cannabis, and they raise their dividend every year. Like I don't need to know anymore. It might go up and down week to week, but no, long term, they're going to keep selling more soil.
Damn. See, so like this helps me leverage my mind on like, okay, in the future when I'm investing, meaning like 5 years from now, because I'm shifting my mind, it's making it more intentional. I don't have to say, okay, I'm about to go after these stocks because I want to make this great play. Nah, I mean that's cool. But now I'm not even looking for a cushion standpoint. I'm looking for the sustainability. That's what I'm looking at. So now I'm like, with that being, like I said, Microsoft, you saying SPG, and now SMG, is there like do you think energy or like, is there an energy or like a car company that you see with a dividend, or like what's one more piece that you will see with the dividends?
Automotive, it's a transforming space right now. Like what's hot one minute, it's like out the next minute. So like I'll say that's a tough one. We know what's going. Like if you're gonna go automotive, there's only one play.
Tesla.
That's Tesla. So it's just you buy a little bit every week. Whatever you're comfortable with. Don't worry about it. That sucker's going up.
Yeah.
We like, why would you? It's such a volatile space. Like the only two that are worth, like I'm okay with buying the industry leader in a space I don't really understand or comfortable with because like they're gonna winners keep winning.
Yeah.
And for China, if you want something that's in a more early winning, that would be Neo.
I got you. So what?
Neo is way ahead of all the other competitors.
Okay.
So to stick with like a Neo or a Tesla, you have to believe for yourself. You're still in the early innings of electric vehicles. So what percent of cars on the road do you see are electric in your area?
I see Tesla. I see. Like I'm at the shop today, and I see a car leaving. It's a Tesla. I see another one pulling in. It's a Tesla. Another guy I know got it. It's just like the more I go on, the more I see the Tesla. That's actually a car that I want to get in the next couple of years.
Yeah. So if you drive around for an hour, you see 1,000 cars. What percent of them are Tesla or electric?
Probably about 15%.
So the market penetration is still pretty low. Right? If this was a baseball, if this was a 9-inning baseball game, you might be in the first or second inning.
Yeah.
You see some. So
That's a great analogy.
I like to express it with a long-term analogy because it's going to be a rocky ride. Like Tesla's gone up like crazy.
Yeah, I know.
I finally started buying.
It's almost like Bitcoin.
Exactly.
Like
it's exactly like
a high run, and then it's a dip,
Yeah.
and then it's another high run, and then it's going.
Yeah.
You know what I mean?
So you have to brace yourself for that. So you have to like be able to understand these things like with conviction. Every car is going to be electric one day. Like that's coming. I don't think many people would disagree with that anymore. Like it just won't be an option to have a gas run car for multiple reasons. So to kind of brace yourself for the volatility, Tesla's kind of high right now. It's like 600 per share. It might correct. It might crash, go down to 300 per share, 200 per share. You keep buying.
Yeah,
when it goes down, you buy more. It goes up some more, you buy some more. That's why volatile stocks are like really hard. They're really hard because when it goes up really quick, you don't want to buy more. When it goes down, you're scared of buying more. Just keep buying it.
Yeah.
You got to have that game plan going in, or you're never going to build up that position big enough that it makes a difference.
So probably the last question, because I know it's, you know what I'm saying, it's kind of getting late over here, but I know for you it's probably different. What about the do you see solar doing anything, or like the energy field doing anything in the next 10? Because I hear talks, I hear penetration. It's only a little bit though. It's not. I hear the eco-friendly getting ready to come and make a big surge, you know, around this time. You know what I mean?
Yeah. So solar is part of a greater theme of sustainable investing. Sustainable investing would include, you buy companies that have a goal of going like zero carbon in the next 10, 20 years. You buy companies that don't pollute. You buy companies that they do investments like for the environment, like they clean up things around them. So it's easy to kind of mix all these narratives with like the return. The problem with capitalism is it doesn't appropriately price pollution, right? Like it doesn't reward people for doing good things.
I got you.
So as a sustainable investor, it's kind of more like an ethos, like a philosophy that you're doing.
Okay.
You're doing it because you know it's good for the planet.
So that's not necessarily a dividend. That's more of a sole purpose.
So just to kind of frame it, there's not that many good opportunities. There's some that's there. So there's one utility stock that's mostly sustainable energy. It's called NextEra. It's a utility company based in Florida. They mostly have like solar and wind, and they pay a dividend as well.
Mm-hmm. Would I find them on TD Ameritrade or Robinhood, or what? Do you know?
All of the above. NextEra. So, like this pick, it's a dividend payer because like they have people in Florida that this is like their Memphis Light gas water. They just pay their bill, so they generate a lot of cash flows to give into dividends. So NextEra is
$73.55. Yeah, it's NEE.
Yeah, my internet's so slow it's not pulling up.
It's all good.
Yeah, for a pure like solar panel play, First Solar. First Solar. Crash solar.
No, it's all good. I mean, I'm looking at.
Yeah. Okay. I need to share. My internet's can't support that much right now.
No, it's cool.
Yeah, solar panels, like people don't really care what brand name is on it, right? It's not something you wear on you like your phone. So it's a commodity. Solar panels are what's challenging about that sector is like it's a commodity. It's like you don't care if your corn came from Idaho or your corn came from Georgia. At the end of the day, it's just corn. So these type of industries, they don't tend to have they don't tend to have a strong brand presence. And brand presence is like what helps people help companies build. Like I drive around California, we have a lot of subsidies for solar panels, and more additional states are starting to do this.
Mm-hmm.
Like they'll give you 20% off or something. Like the taxes you would have paid, you just take it off of your solar panel bill. So it's being subsidized. From my observation, the way that like solar panel and the sustainable is going, they're going against a very deeply entrenched player that have like a lot of advantages. All the oil companies, they have subsidies too. All the coal and gas companies, and solar and wind, they're just solely just chipping at all the disadvantages they had, just like Tesla did. Tesla had to keep chipping against the car industry, and it finally broke them. And it broke them this year.
Damn.
And like as you saw, like everyone kept shorting Tesla. People were spreading all these rumors that they're gonna fail and all this.
That
and finally, but yeah, they didn't give up. And then, if you had one share of Tesla at 300, you would be at like between 2,000 to 3,000.
That boy was he been working that company.
600 times 9. Yeah, you would have made about 10x, I think, if you had Tesla, and that's 1 year. That was a tough hold, right?
Yeah.
Like
I know you were battling with that motherfucker.
Yeah,
Hey, Lee was like,
all the stories were so bad, like I was scared to touch it. Like everyone was, and now it's like everyone loves it.
Yeah, but I mean,
amazing how that flips.
But that's how he is, though. I think like
he's a polarizing person.
He's a futurist. So it's like, man, some people are in the future, some people are in the past, some people in the present, some people don't know where the hell they at. So it's just like that goes back to me studying the CEOs of companies. Because if I have a certain instinct about myself and I see it in these people, like I'll give you an example. And this has nothing to do with stock. But this, like Gary Vee. My homeboy introduced me to Gary Vee, and it was like he saw something in me that he saw in Gary Vee. And I was just like, I see why you sent him my way, because I like to think ahead. And now if I'm preparing for that time frame, it's like, hell, I'm on to something else by the time you catch up to where I am. So now it's just like the conversation of what we're talking about now. Next era. If I'm doing cost per average and I have things working, I'm learning systems where I'm working at now, and I'm implementing these systems. Now it's me delegating that space for myself, and not only myself, now for my children, to where it's like I'm generating something for the next generation. And now they are taking on this thing too. So that's, you know what I'm saying? Like, in a nutshell, that's it, bro. Like, I definitely appreciate this. I think we need to do this more in the future, as far as like maybe delegate once or twice a month to do this and just really go forward, man.
The past month, it's slowed down a bit for me. Still working. Like I'm still working. But California closed down again just because the hospitals were getting full. So I've been reading a lot of books. Absorbing a lot of podcasts. And
what book? What's the latest book?
I read The Psychology of Money.
I just finished this. Well, I'm not finished, but it's the Can you see that?
25 Sales Habits
of Highly Successful People.
Mm-hmm.
And then Who Stole My Pension is another one.
Rich Dad, Poor Dad.
Yeah. And
Yeah.
22 Immutable Laws of Marketing. So it's just reading a few things because now I'm working with a few different brands where I'm actually doing brand ambassador and consultant work, where it's like I'm not necessarily just wearing the clothes, and I'm also not giving them anything. It's more or less they're mirroring their image off of me, but I'm helping them tap into the culture of what they have and what they're doing. So it's just doing a lot of studying and taking my time and just analyzing things and just presenting it to where it's drawing in the people. I'm building what I'm doing, and man, it's been fun, man. I've been busy though. I've been busy as hell. It's been productive though.
That's good.
Yeah.
Oh, yeah, thanks for the update. Yeah, I probably read more than 10 books this year. Mostly like business and investing, also some on mindset. And I was like listening to so many like finance podcasts. Like my brain was just like getting overload.
Man.
So I started reading more books. I kind of like books kind of help you slow down. You kind of just focus on one thing. Like when I was like listening to podcasts or different channels, I tend to just jump around too much and just like go on a binge. Like with books, you kind of just slow down. You kind of soak it in. You kind of take some time to reflect and apply it. There's just so much information going on. Like the pace of change right now that's happening because of COVID, from the economy to like different business models. It's accelerated these things. It's just like a whole world, and it's not slowing down, right? The pace of change just keeps going.
And it's like I tell people if you didn't make any significant shifts or changes before 2020 and during 2020, get prepared in 2021. Then you're gonna have to make some significant changes. You know what I mean? It's gonna have to be some sacrifices. Because if it's significant changes going on, gotta get ready for them. But man, yeah, I'm not gonna hold you, bro. I just wanted to tap in, bro, and figure out another day, even if we do it again next week or 2 weeks from now. You know what I'm saying? Do it again.
Yeah, thanks for reaching out and always getting back to me right away. And just to close with that thread, we made it a good year. It was challenging on many different levels or dimensions, but that gave the flame for us to grow. Kind of seek more knowledge, apply it to ourselves. And the way I look at it is like this is just building a foundation, like a springboard for like next year, just to make it better.
That's what I'm looking at too. Yup. But yeah, man, I ain't gonna hold you, man. Just tap in with me, man. Let me know what's up, bro.
Yeah, we'll do that.
All right. Peace, man.